Welcome back to another video. It's Chucks here. What a beauty EU has been over the past 2 weeks to follow price in one direction. The higher time frame has given us the clues, and we've been able to use London session to play those higher probability moves, moving towards the downside. EU has given us the opportunity to play that momentum where we know we're going to create our biggest trades playing the correct direction. This is the exact type of price delivery that I want to be involved in. This is what my A+ system is built for, to be in one direction of the market. This is how I can create large RR trades off the back of the move in the market. If you can see here, for the past 2 weeks, we've been moving to the downside. I trade London session, and that's where I focus on being in the correct direction. Anytime I can place a sell, knowing that price wants to move past previous lows, for me, that's a probability within my trading edge. That's exactly what I want to do in this video, is break down to you how I was able to be a part of these continuation trades to the downside and how I knew to be playing lower price in the first place. Huge positions can be held in these moves without putting in too much effort. It's actually quite a simple process, which I can draw to you right now. You don't even need to watch the whole video. Is that when price is pulling back, that's when our opportunities are presented to us. That's when we should be looking at being in the market for continuation. So if I can tell you here that price wants to move lower continuously, will you be able to enter at a great location following that momentum shown? That's all you have to do here, is place trades when price is pulling back. Because we know the higher time frame direction, we know that that previous low is going to be the target, and we can place trades in that bearish direction with higher probability of closing big positions. And this is what I'm always promoting to traders. 99% of traders lose, and that's a fact. So rather than trying to make every trader win most of their trades, what my process focuses on is catching bigger moves. Yes, we may lose trades over a series of 10, but if I'm able to capture 2 wins that have or are equal to high RR in the market, then that will offset my losses. This will lead me to, over time, be able to increase my equity and not be in a phase of break even or drawdown. Not only is the RIMC model allowing us to improve our trading based on the location of our trades, but it's also allowing us to play the correct direction over time. This is where we'll make most of our trading returns over the year in this phase. And because we know this phase is going to be continuation, what we look to do is to place trades in the bearish direction until a previous low is taken. And the representation of that is the exact thing we see on the left here. And that's what we're going to go over in today's video, making sure you understand as the advanced trader that intention for lower prices is going to mean that price, when it creates a new low in the markets and we see price react, move higher, and then start to move in that bearish direction, we realize that is the purpose of the pullback, is to create a low for price to pull back and then see a continuation lower. This is what creates these large candles in the market, and these large candles are a representation of intention. So this is why we have intention for lower prices. So once upon a time, we can imagine that price was up here, trading, and over the past 2 weeks, we've seen EU move lower. And that's exactly what we want to be a part of, the correct direction. That move over time in the past 2 weeks has been a great representation of lower prices. So before I take you into my A+ setups for London session, I first want to break down the understanding of intention in a little more detail so we can understand how price moves from the high it creates to the low it creates and how we can be involved in that delivery. Now, if you didn't know what the RIMC model is, it's a process that allows us to be in the correct direction in the market. So what we do is predict the next move based on a location of price. So here we can see price is coming from a high and moving into low prices. If this is a higher time frame candle, let's assume that this is a 4-hour candle, that over that period, price has continued to move down. So we've opened up quite high in price, and then we continue to create previous lows in the market, and we continue to take those previous lows as price starts to move down lower and lower and lower, right? until it comes to a close at the end of that period. And we can see that then over time, price has created lows in the markets and price has continued past those lows. Now, how can we be in the correct direction? Well, we need to understand that this is being created for a reason. And that reason is equal to the point of mitigation. So because price is mitigating now, we're likely going to see price create lower prices. Now, let me show you how easy A+ setups can be with the understanding of lower prices. We can start to position ourselves in these pullbacks in the markets. And when price does pull back, we can then aim towards the previous lows in the market based on continuation. And if we can position ourselves well over time, what we can then start to do is hold those positions open for multiple days following the intention in price. Now, assuming we are correct, we can start to close 20, 30, perhaps even 40% of our account profits in this period in the markets. And the way we're able to do that is not because we're aiming for 1 to 2s or 1 to 3s. We're aiming for 1 to 5s, 1 to 6s, and high RRs in the markets. This is exactly why I trade the 1 minute time frame in London session, one of the highest volatility sessions in the market, because I'm able to catch at least 20 to 30 pips, which for me is equal to 10% returns. So if I'm able to be correct, which the RIMC model allows me to do, as long as I follow it, I will be on the right side of the markets. What I then do is let the probabilities play out and allow my series of 10 trades to present high returns. And we can do this using a repeatable process. And this is what we're about to go over, these A+ setups. Now you understand that when we're following the intention of price, we can know that that intention is for lower prices. And so then when price does pull back, we know what to do, and that is to take sell positions into the previous lows created. And that's exactly what you're going to see me do over these 2 weeks. With precision, with the higher time frame, we can start to execute those sell positions quite high in this intention. Let's dive into the week and let me show you how we can be on the correct side of the markets continuously using a repeatable model, RIMC. So let's backtrack back to the previous week where we spoke about taking these opportunities from this higher time frame location. We can see that when price is pulling back, I'm involved in the markets. There is different phases that we can be in. What I find in London session is that it doesn't always present me in the best location, but what it does present me with is an understanding and what I can do over time. Let's say this is Asia session and London sessions down here. Well, then when London session starts to pull back, I can then think about executing sell opportunities based on the continuation logic. So yes, we may be buying for the session based on its location, but the overall move that we're looking for is for that pullback to then take sells into lower prices. Remember that we're aiming for these previous lows because that's the market's intention. So first of all, let's look at the higher time frame. That's where we need to start because that's going to give us the ability to make good decisions. So I've just gone ahead and moved up to the daily time frame. Where can we see price was located 2 weeks ago? Right here. And when we look left, we can see we had a previous high in this location and price moved above that high and we saw a lack of intention. So what we just spoke about was price showing intention. And do you notice that we're not seeing that intention shown here in this move? What we're actually seeing is market slowing down. And this was one of the first signs of knowing price may start to move in the opposite direction. This is one of our setups that we use in a higher time frame. And what I do then is go down to the lower time frame and play that new intention in the market. So no longer am I looking for long trades in this location. I am looking for short trades in this location based on the higher time frame setup that has been presented to me. We understand the higher time frame location. Let's look at the lower time frame here. So we're on the hourly chart and we can see prices moved above a previous high in the markets. We can also see this higher time frame swing high that has also been taken out. And we see when it was taken out here, we saw a lack of intention for higher prices and we started to see a move to the downside, right? Notice how this previous low would be a target based on the opposite intention. It's likely going to aim for that low. We see here that we got the range mitigation and actually price continued to move higher. How do we know that? Well, price continued to move and create new highs in the market while sustaining its lows. What do we notice about these lows? We notice that it's building cores here in the middle of this sideways range, and this is likely where price is going to want to move back into. We know the big participants are going to want to stack their positions. That's an observation that we had as price was moving up. And as price started to continue higher, we had another move above a previous swing high. And once again, we saw a lack of intention for higher prices. And this was the first point for me where I started selling the markets. So I actually recorded this trade live for the community. So I'll just put a preview up on that as I'm going through this. And this was the exact position I took for lower prices. And that was the first representation of being in the market at the correct time, following the correct intentions. And what I thought from a higher time frame perspective is that perhaps now price can start to reverse, and as I said, move back into those middle locations. So if we can start to get that in the markets, that will start to bring great selling, because what price is going to then do is create those new lows in the market and continue below those new lows. So even without even seeing this delivery on the right, I can already imagine that trend delivery that can present itself and me being a part of that correct direction in the markets based on the higher time frame setup. So what a beauty to trade. Very easy observations here, repeatable observations where we can look to do the same things based on the process. I'm not trying to recreate my ideas every single time. I'm actually approaching the market with a repeatable mechanical process, and that's the RIMC model. So what can we see here? Price then moving in the opposite direction, and that's exactly what we'll dive into on the lower time frames. Now we have the higher time frame understanding behind us, and we can start to anticipate the continuation of the intention shown. So let's put all our indicators on the chart so we can understand how me as a London session trader maneuvers around the locations I'm presented at the start of my session. Let's hop down to lower time frames and look how we can play A+ setups knowing the direction of price. Zoomed out here on these 3 short trades you can see taken over Tuesday, Wednesday and Thursday. We can see that my trades are being taken really following a repeatable process. So we can see here range, initiation, pullback, mitigation, continuation. This is exactly the stuff we've been talking about here in London session again. You can't really see it, but on a lower time frame, you do have a mitigation in a lower time frame. A nice move in that bearish direction. And over here, what do you see? Price moving back into previous range, right after creating a low, pulling back. And what do we notice about all of these trades? Price continues past its previous low created. And we can see that these moves are following a intention. And we can see that over these 3 days, we're actually shown from a higher time frame perspective that price is also trading in a bearish direction. So when I look in hindsight and I look at these trades and I say, well, I seem to be trading in the right direction. Why is that? Why? Well, that's the higher time frame setup that I was talking about. When you can become an advanced trader and be highly confident and believe in the process, because the process is based on the people who move the markets. This is exactly how we trade at the highest probable locations. And not only do we trade those locations for a 1-to-1 or 1-to-2, we seek 10% out of those trades. So depending on what you're risking, if you're risking 0.5% a trade, then that's a 5R trade right there. That 5R trade is halfway to passing a funded account. And for the trader who has wins and losses in their series, those 5R wins are going to allow you to manage your drawdown. So many times traders find themselves just at break even and in drawdown consistently because their model doesn't consist of high returns. It only consists of small returns. So if the trader isn't trading well or they're on tilt and they go through bad periods, which is 99% of traders, what they're actually doing is taking away probability of success. Just by increasing your returns per trade, you can then start to increase the probability of your success while still having a poor strike rate. Right? We can't assume that you're going to get good straight away. We can assume that the RMC model will make you a much better trader. We can see here that all of these opportunities offer a 10 or more % move. I look for anywhere in London session for price to move between 20 and 30 pips. Typically, this is enough for me to TP. And if price doesn't move that much in the session, then likely I'm not going to TP. And I accept that because I'm only focused on high returns. So let's jump into this first trade on Tuesday. Now we're here on a 1-minute chart. We can see here that price ranges and then moves in the bearish direction. So now I've been able to discover the people who control the markets and their intention. And what I did was then follow simply that mitigation, for a continuation in lower prices. And we can also see here price ranges and then also initiates and continues in that bearish direction. There's multiple ways that we can become part of this intention in the market, but the best way is at the point of mitigation, because here we can guarantee the biggest portion of the move while taking the best A+ positions in our session. So that's one example where we can see that new intention coming to the market, and we can see continuation of that intention. Notice that over time, this is creating those large candles to the downside, over time showing us that we're on the correct direction. What do we notice here quite quickly in the next session? We notice that we're no longer placed high in our session. Notice that price is low and then we end up being high. Well, here price is low and ends up still being quite low. Right, we're not moving back into high prices. If this is high and this is low, then this will be a representation of high prices. And actually, price is not placed high. And when we think of range, initiation, mitigation, continuation, you notice that we're consistently placing ourselves at the high side of probability for reaction. Because we understand the intention that previous lows have in the market when price is bearish, we know that likely this low is going to be the target. And what can we see over Asia? We can see over Asia price pull back. We can see price move sideways and then start to stairway itself into the previous low that we can see here. So with that understanding and knowing that price is likely going to take its previous lows, in my session, I followed up on that continuation momentum. The position of my trade slightly changes. What I'm not doing then is waiting for price to end up in that premium location. What I'm actually saying is, hey, I can play that momentum to the downside because I've been shown it in my session already, and play that next phase of range, initiation, mitigation, continuation. You see, as soon as the price moves into that point of mitigation, price is off, and then I'm able to secure another 10% in the markets. Again, if you're trading 0.5% risk, which is more than okay, we can see that this is a 5R position presented to us in our session without much effort by using repeatable understandings. So again, a nice opportunity to be in that direction in the markets. We can see then price pulls back. And what do we start to do over the session? We actually start to pull back into those previous high prices that we talked about where price moved away from. And we can actually see here, again, our traders are going to know what to look for. We do have a range here in high prices, and this does become a future mitigation point where I don't really trade New York too often, but this is an opportunity that I would be looking at to get into the markets. And what do? We get sideways delivery, price pulls back into that sideways range, and then we can start to look for another opportunity to get short based on this intention. And what can we see? Price then continues in the bearish direction for another big return trade in the markets. Remember, I said that in these initiation phases, when price is moving with intention, this is when we can aim for previous lows and seek to be on the correct side of the market. So let's go over the next session, because once again, what can we see? We can see that price is not positioned high. We can see over Asia session, if this is low prices, this is high prices. And when we open up in London, we can see that we are not high. This is not high prices. So this is very similar to the previous day where I'm playing the momentum in the markets. We can already see that we have a higher time frame range here. We have initiation, we have another range presented, and we have initiation. So I'm following that momentum in the markets. This is the perfect type of trends to be involved in. Remember that we're using a repeatable process, and what we're doing is following the people who control the market. So what do we see here? We see sideways range, we see intention, and what do we want to do? We want to follow that. So then when price pulls back, remember we're always getting in on the pullback. Here's a previous range in the markets. Here is price moving into a premium location, and then we can start to look for opportunities in that direction, putting our stops safe above the previous high. So once again, here's an opportunity where price has pulled back, created a previous low in the markets, and then price comes down and targets that previous low. And we can see here the trade then is continuing in the bearish direction. And actually, this trade was a trade that I held, took two positions here, one for a 1 to 10 as my usual risk to reward, but also the other to hold open for a swing trade. And the reason why I was doing that, if we just quickly zoom out to the 15-minute, this time in the markets here, I was anticipating price aiming for these previous lows as price was showing its intention to move to the downside, right? So low, target in, low, target in, low, target in, low, target in. We also actually had equal lows back here. That was the overall target for price. And what we wanted to do is see price move in that bearish direction. And we actually saw that in price, right? Before we started to move in opposite direction here. So once again, we're in a sell trade following that momentum in the markets, using a repeatable process in terms of execution. Remember, that was on the 1 minute, the 1 minute time frame. So many people are unable to even read the 1 minute time frame, but just in our 2 hour window, we're able to find some great opportunities to follow that higher time frame intention. I don't trade Fridays often. Here, I didn't trade a Friday, but what can we see though, even though I didn't place a trade? If this is low prices and this is high prices, as London comes into open, we can see that price is relatively positioned low. So here, I wouldn't be looking for a sell trade in these low prices. I'll be looking for a sell trade in higher prices. And we can see again, if this is relatively high, then this is where I want to think about taking those trades. And this would have been a session where I would have looked to get long based on the location. So again, even though we don't have to always have those sell opportunities that are presented to us, we know that based on location, we can take some good positions in the markets. This is the last trade I'm going to cover, and this was coming into this new week open. And what was really nice about this here, higher time frame range creation, and when we use our location tool, we can see that price is moving into an edge where we can start to look for continuation again in that bearish direction. We know that the people who control the markets, they're going to start executing their positions here, and we can start to be a part of that intention in mind. This is another trade that I was involved in. I'll put a recording on the screen. Many of our traders was also involved in this trade for a move to the downside. Here, once again, in my session, another A+ opportunity to play the correct direction. We noticed that here's a previous low created, and here's a previous low taken in that trading day. Again, beautiful to see to the downside. So there's some continuation trades to the downside that I'm taking here. Not all my trades are hitting TP. I don't expect to win all my trades, but when I am trading in the correct direction, I do expect to win my trades over time. Some of my positions may not win, but over time, if I trade in the correct direction, and that is knowing that price is aiming towards taking out its previous lows based on the intention in the markets, then this is what I can start to follow on those lower time frames. And when we start to position ourselves in great locations, I can either play the mitigation or even play the continuation away, aiming towards that previous low. So very simple model in the markets. Remember that the trade's always going to be on the pullback, and we're looking for price to take out the previous low. For the last time, zooming out to the higher time frame, you can see how previous lows have been created in the markets and previous lows have been taken. Now, the only reason why this is going to happen is because the people who control the markets are intentionally creating low prices, and that's why we're driving in one direction. And we also see that previous highs are being sustained in the market. What we see is that price is not moving above previous highs, and we see new highs being created. When we start to see that change in the markets, then we can start to position ourselves on the opposite direction. Remember, price has just taken out equal lows in the markets here, and now we can start to think about perhaps the opposite intention. I will say this for your USD, for you guys who made it to the end, is that this is going to be a great decision point for what we see come over the next 2 weeks. Because of the higher time frame, we could be seeing price move lower over time. And because of the higher time frame, anyone who doesn't know of this intention shown to the upside, we could also be bullish here. So we shouldn't have to know the direction of the market all the time, but there will be points in the market when we can identify with accuracy and higher probability the correct direction. It's going to be a great week ahead where we can expect definitely some activity based on these recent candles, a range, and that range is going to lead to initiation. Definitely something that I want to be involved in, and potentially we can see that intention shown this week. If not, price can continue sideways, and we will be patient and wait for that intention shown, and we will follow it on the lower time frames. If you've enjoyed today's video, guys, leave a comment down below. Let me know what you think, and how's the past 2 weeks been for you? Have you been looking to buy price? Do you trade London session? Let me know. And if you've been a part of some great trades, especially for those in our community, then definitely drop some of your trades below. What day, what times you was involved in price, and your return on that trade. Yes, we're not going to win all of our trade, guys. We can't be perfect every single day, but remember that over time, that's what matters. Over time, how we perform, that's what matters. And we have everything you need inside of our membership for you to access that exact process. Click the link below to get our free PDF, and you can see exactly how we break down these trades in a bit more detail and how you can use our processes in your next session to capture those A+ winning trading opportunities following the correct direction.